Good morning, folks, and welcome to Stock Charts today. This is Bob Desmond. It is May the 2nd, 5:31 in the a.m. Eastern Standard Time. Let's get to the charts. Let's kick things off with the expectation today from the Federal Reserve. They will make an announcement. No move is expected. Forward-looking guidance. They'll be watching for a statement out of the Federal Reserve. Will Jerome Powell be a bit more hawkish? It's possible because the market has not broken down below the February lows. Rest assured, had it, he would sound more dovish. But the fact that the markets are holding up at current, especially after yesterday, we saw a rally off the lows, we may just see a more hawkish tone out of the Federal Reserve, because what the Federal Reserve does is kill bull markets. Now, the price action on the U.S. dollar supports my argument, as does the price of the 10-year Treasury note, which has seen this week an up week thus far. But the stock market yesterday, the fact that it was able to reverse off the lows is sending a different signal. It's implying that we may get a softer message out of the Federal Reserve. So the jury's out. I would side with the bond market and the currency markets because they're much larger than the stock market and definitely smarter. So let's kick things off first with Bitcoin. Bitcoin is up this morning nearly 2%. It is pressing up against resistance and very close to a breakout. We have higher lows. These are all 4-hour charts, if I didn't already mention. So Bitcoin looking strong this morning. Let's get to the dollar. The dollar has paused a bit. It's down slightly, but the path of least resistance is definitely to the upside. We do have resistance above at 92.50. So what we're looking for is a rally up and above this upper band of resistance or a break below this lower band of support. Odds favor bulls in the short term anyway. Remember, there is resistance and significant resistance immediately above. Now, how is the price of gold responding? It's up this morning. We did close yesterday off the lows. It's up this morning. We're having some follow through. But man, these past couple of weeks have been horrific. Remember, it was only back here on the 11th of April. It doesn't seem that long ago that we hit multi-year highs on gold, and then sellers moved in and took it off the highs. And so yesterday, we made new lows for 2018. So short term, this morning anyway, again, this is only a 4-hour chart. Gold looks okay, but the path of least resistance is to the downside. Watch the 1300 level on gold. Silver outperforming gold. While yes, it did hit a 2018 low, we are up stronger this morning than what is gold. And it appears as though we have a breakout on a 4-hour chart. Yep, we do. We broke out here, pulled back, retested overnight, and now we're seeing a continuation breakout on silver. All right, to the stock futures. Again, yesterday we saw a reversal on the Dow. We are moving higher this morning, up 42 points. The NASDAQ, a good reversal day yesterday. This morning, we are pressing higher, no new daily high yet. We're up about half percentage point. Here's what I'm watching. We have a bull flag formation forming. We're attempting to break out and close above the upper band of that bull flag formation. The S&P 500 pushing higher, finding resistance at the 20-period moving average on a 4-hour chart. Not as strong as the NASDAQ. But remember, what we have this morning is Apple. Now, Apple to me, I'm going to go over a static chart in a moment. We'll take a look at the pre-market activity on Apple. It's still early here. We are holding gains from yesterday's earnings announcement. They pulled a trick that many companies do when they disappoint on earnings and they don't want their stock to get slaughtered, is that they announce a share buyback. Now, the key to remember is that companies, just because they announce a stock buyback, aren't obligated to do so. So it really costs them nothing to put out that statement. Now, they disappointed across pretty much every product channel in terms of unit sales. And I read an article last night where actually the iPhone peaked in sales back in 2015. at around 62 million units. Now, Facebook reported earnings a few days ago, and they did the same thing. They announced a big buyback. They threw the kitchen sink at the earnings report because they knew that they were going to get decimated if they didn't. Now, keep in mind, Facebook beat on earnings, and users grew. But you can see there's been no real headway since the release of earnings right here. You had the response. We actually pulled back. Now we're trying to consolidate and take out the highs of the 27th. Back to Apple. We're in a triangle formation this morning. I think that we may get a day or so of upside move. The chart I'll be watching is this one here. The weekly chart of Apple. We have a lower high on Apple. We are this week at current trading back above a support level it gave up last week. We did not put in a new weekly high. Now what I'll be watching for with Apple is, do we close on Friday below this lower band of support? And do we put in a new weekly high? Because if we do, the shares become a short on the new weekly low. They really need to close above this key support level. Stokes are really breaking down, but if they hook back up, we may have a double bottom setup here. But at current, they're trending down. Watch for close below 50. So I'm skeptical with regard to Apple. Yes, they're up in the pre-market. Yes, they're going to have a big share buyback. But that's the street taking parking space up in your head, thinking that the shares are going to go to the moon because of a $100 billion share buyback. Again, there's no obligation for the company to do so. So, members, more to come on Apple. Now, I was asked about the Chinese stock market, the Shanghai Composite. Is it oversold? Is it time to buy? My answer, absolutely not. Many people just assume that China is just this juggernaut of economic growth. And while they are, to a certain extent, their stock market peaked out back here. They had their own bubble, and it's not over deflating. We peaked out in June of 2015. Went into a steep correction. We've been consolidating for quite some time now, but we are threatening to break down below critical support. If we break down below 3,016 and close below that level on a weekly basis, the Shanghai Composite is going a lot lower. I've spoken about China in the past and it being a short. And these trade talks are not going to help China much, if at all. All we're looking to do is take away their edge, i.e. the theft of intellectual property rights. So while we're up this week, we're well off the highs of the week. Again, watch for a breakdown below 3,016. If it breaks that support level and it appears poised to close down below that level on Friday afternoon, it's a short. To short the Shanghai Composite, you could use YANG. There's another one out there as well. But we are in a very tight triangle formation. If the Shanghai breaks down, I would validate the price action on the YANG, making sure that it is breaking out, and I would put on a trade using the YANG to the long side. And again, it puts you short of China. And that's it for this morning, folks. Everybody have a profitable trading day. If you watch this on YouTube, subscribe to my channel, leave a comment, subscribe. If you watch this on Facebook, StockTwits, Twitter, Seeking Alpha, follow me there. If you watch this on the website, enter your email address. We hate spam too. You'll not be spammed. You'll get a couple of free trade tutorials. Everybody, again, have a profitable trading day. Watch out for the Fed meeting. And beware of the bright green futures. Be well.